Good morning, good afternoon, everyone. My name is Robert Clinkenbeard. Thank you all for joining us on our first monthly webinar for Bruce Wilson Company. The next one's going to be around leadership development. It's going to be on March 13th at the same time. We'll be sending out more details shortly. As I said earlier, please add your questions to the Q&A, and we will make sure we address as many as we can before the end of the session in the next 60 to 90 minutes. Today, we're going to get serious about business intelligence, financial analysis, and the tools available to help reduce costs and improve profitability. To do that, we're asking our business intelligence and financial analytics expert, Steve Steele, to walk us through the capabilities of modern financial dashboard and to help us learn about the data to get a 360 picture of how our organization works and to help us to make more informed decisions. So Steve is our financial expert, our impact leader for the Bruce Wilson Company. He's also our financial columnist for Lawn & Landscape magazine. Steve holds an MBA in finance and accounting, been involved in business and financial operations for over 30 years and serving in both senior leadership and executive level capacities. Since 2005, he has served in the green industry, assisting our clients with business, financial management, fractional CFO services, systems development, and integration. Steve, you've got an amazing career. Thank you for presenting today. Looking forward to hearing what you have to say.
Robert, thanks for inviting me to be here today, and thanks to everyone who is attending the call live today. Appreciate your time and attention today. Welcome to the first, and as Robert said, of our 2023 webinar series, The Power of Financial Dashboarding. You are going to get an overview today of a number of different things, but hopefully you'll walk away with not only an understanding of what good data can do within your organization when it's presented the correct way, but maybe some additional questions to take back to your organizations about the underlying data that forms the information we're going to see later today. So without any further ado, let's move on. First, I want to say I got to answer a question, and that is, some people asked me as the promos went out for this, why in the world would you send out a promo picture of you holding a camera when you're doing a financial dashboard presentation? And for those of you that watch TV and know who Dr. Rick is, I'm a big Dr. Rick fan. Dr. Rick says you do not print the internet. And so that really kind of squashed my ability to print out a bunch of spreadsheets and hold those in the promo. So I wanted to give you something that I'm equally passionate about, which is photography. So that's the answer. That's why the camera is there in the promos. This is something I firmly believe in. Good financial management occurs by actively controlling what's in front of you and not passively observing what's already behind you. Running a business is hard, right? Everybody on this call understands the daily challenges that you face running a business and making good decisions. And right now, within the economy, there are so many different conflicting economic indicators that are sending us mixed signals. Sometimes it's hard to know what the right decisions to make are because the old rules do not apply. The good news is that the things we're going to talk about over the next 40 minutes or so are solid principles that will work in any economy. So if you implement these things within your organization, you are going to be far ahead of your competitors when it comes to having the right data at the right time to make the best decisions possible. Where does that start? Well, that starts with data-driven decision-making. And we make decisions every day within our organizations based on a lot of data that we receive from different sources, and we make decisions based on our gut instinct. Gut instinct is a great way sometimes to make decisions, sometimes it doesn't pan out. But if you are an individual that makes a lot of gut decisions, then one of the nice things about having good data is that it can help back up those decisions, or maybe give you some additional indication of what the results of those decisions might be. Now, data-driven decision making can be really enhanced if you've got tools that give you data in a compact space. And financial dashboarding can do that. It can really help give you better clarification on performance, because it makes connections between data, and it consolidates information into a smaller space so that you have data available that you may not have had otherwise to make decisions. A financial dashboard really has to cover key statistics and as close to real time as possible to help you with that decision making. Look, gone are the days when you as a owner or manager could receive a balance sheet and an income statement 2 or 3 weeks after the close of a month and use that to make decisions that result in a winning business strategy. There is so much data available today, and the pace of business is so fast that if you don't act on things that are timely and current, you're missing a lot of ability to do things in the current and manage future outcomes. It's hard to manage when you're looking in the rearview mirror. The dashboard should also satisfy different levels of need. So there are a number of different folks on this call, from top level executives, and maybe there are mid and lower level managers. All of you have a need for data, but you all have need for data at a different level and in a different type of format. So that dashboard has to be able to satisfy those needs from a macro level at the top to a micro level where you can dig down into the data and really get some better detail information. Let's take a look at an example of a portion of a financial dashboard. Okay, I think I just heard a collective gasp from the audience. I know this is overwhelming. It's a lot of data. And for those of you that are clients of mine or who may be clients in the future, know that this is not the way that we present this on a weekly basis. This is an example of a lot of different types of data presented in a lot of different ways. And what we're going to look at over the next few minutes are the ways that you can take this type of information, and depending on the role or the type of information or data that you need, kind of focus in on different parts of this to inform you about how your organization is performing. So any key dashboard elements should be available on your dashboard. Things like key performance indicators, right? The numbers that drive accountability and productivity in your business. Many of you may wonder what those are, okay? Though there are some things that are common with our industry, but there are also numbers that may be different for you within your organization that are specific to your organization. So if you have not defined what the key performance indicators within your own organization are, that's a really important place to start, because even though there's a lot of data available, the data that you want to see is the data that's important to driving the performance and accountability of your own organization. I think any dashboard should include key production information, things like total production hours or production hours by selling division, labor costs, material costs, things that help inform you about the health of your field operation and how they are performing. And then finally, key financial information, right? Things like, how is your cash position? How much are you invoicing? What do your accounts payable look like? Your accounts receivable? your debt? What's your line of credit look like? How does that compare today to previous periods, right? Gives us some financial history or background that we can make comparisons to help inform us about how the company is performing and its health moving forward. So let's take another look at the dashboard. We can focus in on various parts of this dashboard depending on the type of data that we need. The top part of this dashboard has some key data examples that I want to point out. If you're a high-level executive, president, CEO, maybe a branch manager, you may only need the data that we're going to cover in the next couple of slides, right? The period that I'm looking at, the year that I'm looking at, some key production information. How are my production hours trending for this month and for the year? What's my gross profit look like? My gross profit per hour. This is a measurement that one of my clients turned me on to a couple of years ago, and I really like it because what it does is it takes your gross margin dollars and divides that by the number of production hours it took you to produce those gross margin dollars. So it gives us a good way to track whether or not the company and individual selling divisions are remaining healthy, if they're getting better, if they're getting worse, or if they're staying about the same. What's our cash balance, accounts receivable, payables, net income, debt? How do those things look for the current month? How are they trending compared to the previous month? How are they trending over a trailing 12-month period? This little section of the dashboard, from an executive standpoint, could give you a good variety of the information you need. We've also got information here on overtime hours and cost for the month and for the year to date and how those are trending. What our year-to-date net operating income looks like and how it's trending to our annual sales goal. What percent of our line of credit's free? At a glance, I can tell whether we've got the ability to tap our line if we need it. Key ratio data. We'll talk about this later on, but what's my ability to pay my current liabilities? This dashboard happens to give you the ability to choose from one of 8 current rate or ratio analyses. Current ratio, I think, is a good one from an executive standpoint to look at because it can inform us very quickly of the financial health of the company and its ability to meet its current obligations. And then what's our AR look like? This allows us to choose anywhere from 31 to 90 plus days. But from an executive standpoint, I think you're concerned about the dollars that are over 90 mostly, because those are the dollars that you're going to have to figure out how to get or how to take future actions to modify service delivery in order to collect those dollars. I have in these two areas of the dashboard a lot of the information that at a glance I could use to run my business on a daily basis. The final piece that I would look at would be the key financial performance data. How much have I invoiced this month? How is that compared to the budget I set? And the same thing for the year to date. What does my gross margin look like? And how is that compared to what I budgeted for the month and for the year? What does my direct labor cost look like? How is that trending? I think labor for all of us has been a much larger part of our cost of goods sold line over the last couple of years than we've been used to. It's something that we have to manage, and it's the largest manageable cost in any of our organizations. So keeping a pulse on that for your monthly labor costs of budget and year to date is key to gaining points on your gross margin line. And then finally, I'm going to track a key expense up here. Fuel for most of us over the last 18 to 24 months has been something that's been exceptionally volatile. And the fluctuations in fuel pricing caught a lot of us off guard in 2021. So watching how my fuel cost is fluctuating here to budget is one way that I could keep track of what I consider to be a key expense in my organization. And I've got a couple of graphs here. How is my AR trending over the last year compared to the previous year? This can help tell me if my process for collections is keeping pace with needs, or if maybe things are not being managed as well as they need to be in that area. And then finally, I think this is really important to look at from a high level. How are my sales increase, my sales growth year over year? How does that compare to my margin growth? This example is healthy, but if I had a situation where my sales had grown 16% year over year, and I was seeing a gross margin change maybe -2 or 3%, that would inform me very quickly that I have something that I need to investigate, because I've got either a production or pricing issue that I need to pay attention to, quite possibly both. Let's look at the middle section of the dashboard here. This is something that, as an executive, I've gotten most of the information we're going to look at here already in the top portion, but maybe I am the controller or the CFO, and maybe I need to see a little bit more detail in terms of how my profit and loss looks. In this example, we can see what our income for the month looks like and year-to-date looks like compared to budget in both cases. And then we look at also, how are we trending to the same month last year? That can help us understand whether we are getting better or worse on a very comparable basis year over year. What's our budget variance? That's important to help drive sales and to make sure that on a very regular basis, we are aware of what happens on the selling side of the business so we can make any adjustments necessary and keep everyone on track. Cost of goods sold, same thing. Other expenses. So this month expenses would include your indirects, your equipment and vehicle overhead, and your gross or your G&A, and then your net income. Now, many of you in the audience today may be on an ERP system like Boss LM or Aspire. Okay, one of the key challenges that organizations have when they move to a system like that is that they have a disconnect immediately between the information they used to be able to see in their accounting system and what they can actually see today, right? Because you know, if you're on one of those systems, that the only time you see cost of goods sold and sales information in your accounting system is when you make the journal entries at the end of the month to close the month in your accounting system. So for many companies, they go an entire month without having a full financial picture like this. Any model that you put together as an organization should be able to take the information from your ERP system and marry it together with the information that is in your accounting system to produce a regular and timely, complete income statement like we see here. This means that I don't have to wait for the end of the month. I get this every time I update the model. Let's talk a little bit now about data, right? Data is the source of what makes up all of the things that we just looked at. And often in organizations, it's not given the attention that it deserves. But I'm going to tell you in the next few minutes why I think data deserves some additional focus and scrutiny. So data volume does not equate to data value or even data validity. Okay, I'm sure many of you have seen times when you've been given a pile of reports, right? And Sometimes you can go, wow, this person must have really been working hard because I've got all this information here. Okay. Lots of reports, lots of paper, but I think the question is it useful? So there are several things that we have to consider when we think about the usefulness of data. Number one, how good is your data? Okay, this is a key internal question that everyone needs to ask, because the answer to this question immediately impacts how valid everything else that we've already looked at today is within your organization. So question number one, where does your data come from? Well, for most of us, it's locked up in our accounting system, our ERP system. But guess what? There are a number of other informal systems within your organizations where data resides that people use to make decisions. You've got spreadsheets that people use. Maybe not so good at sharing them though, right? So it may be data only that they have access to. Outside applications that people have downloaded on their phones or their computers to help them do their jobs. Understanding where data comes from within your organization is critical because it informs you where people are getting the information they're using to make decisions on. And the more that you can consolidate that data and bring it into a central point, the better chance you have to have good data and data that is available on a broad spectrum. You think about data within your organizations, you have to ask how reliable are the base actions that generate that data. So this really goes back to the processes that you've installed as a company at the different levels of your organization, right? If you have good, solid, reliable, consistent base processes in place, then the likelihood that the data that comes out of those processes is going to be good greatly increase. If you don't have any processes, or if you have a number of different processes, that may impact validity and frequency of the data that you are able to receive. How consistent are the base actions at generating your data? Okay. This is another key question, because even if I have good processes in place, good solid processes that I expect everyone to follow on a regular basis, if only part of my organization is consistently using that process and going through the steps to generate that data, then I may end up with a situation where some of my data is good, but not all of my data is good. And that's what we call GIGO, right? Garbage in, garbage out. So it's really important within your organizations that you are looking at your processes and that you are looking at the consistency with which the people in your organization are using those processes to generate the information you receive on a daily basis. Let me give you an example of this. Does this inspire confidence in data validity? Okay. Now, some of you probably are laughing because I know for sure that you have seen something exactly like this. And when I recreated this timesheet, I didn't put a footprint on the thing, but I've seen many of these. Now, if you think about this as an actual piece of data within your organization, this stands for the base data collecting entry that you use to form many other decisions within your organization, right? If you are using time collection and time tracking that is modeled after this, then the bet is that you don't have very good data available to you at a number of different levels, right? Payroll, job costing. This is also not a scalable process, right? Because somebody has to handle this piece of paper in the field. They have to hand it off to somebody in administration. when it comes back in, it's got to be reviewed, it's got to be decoded, it's got to manually be entered into a system. And all of those touch points increase the likelihood that the data will either be lost or input incorrectly or not be input in a timely fashion. If you think about this as a metaphor for every other process within your organization, it really speaks to the importance of having processes that are scalable and that reduce the number of touch points that the data requires in order to get from its base format into a usable format. Is your data visible? Who has access to your systems? Well, if a lot of our data comes out of our accounting and ERP systems, the bet is that not many people have access to the accounting system, nor should they. But you have to get some of that information out of the system, as we saw earlier, in order to provide a complete picture of what the data and what the reporting needs to look like in order to make good decisions. How's the data presented to users? Okay, presentation is a huge, huge issue. You saw in the dashboard a number of different ways that data can be presented. It definitely impacts its usability. And the currency of data, is it timely? Is it current? Or is the receipt of it significantly delayed? If it's significantly delayed, it is not of value or is of far less value than something that I'm looking at that is current. In order for all of this to work, in order for it all to flow up into a financial dashboard and model that's usable, it has to be timely, it has to be visible, and it has to be visible to the correct audience to be of use, okay? Let me show you a couple of data examples that are what I would consider to be fairly common. Most of you will recognize this as a portion of a income statement. Now, income statements are standard, they're standard reporting fare. But if I want to make decisions based on this data, I have to study this at a fairly intent level and maybe have some notes or a calculator in order to get data that may get me to a place where I can make a decision based on what I see. This data that I just put up on the screen is a little different, right? But it's still in a table format. It's got some highlights in it. But if I were to just look at this out of the blue, I don't have a lot of context to tell me what this data means. And again, there's nothing here that readily gives me an ability to look at this and assimilate it into some type of data that can be used to drive decision making. So again, lots of numbers, lots of data, but is it useful? In this format, it's not probably very useful to any of us. So let's explore that. What makes your data usable? Well, as we just saw, a large part of that is how the data is formatted. So within your organizations, as you think about how you're going to do financial management, you need to think about how your data is formatted to the end user. How is it presented? So is it presented in a manner that makes it usable for that end user? Or is there something else that that individual is going to have to do to manipulate that data to make it something they can use? In order to know how it needs to be formatted and what needs to be presented, you have to know who's using the data. And as we've discussed on this call, there are a number of different individuals represented. As the data provider, I have to understand what your needs are and what format makes the most sense for the role that you play or the way that you need to see that data because of how you're comfortable seeing it. And finally, I have to give context to the data. I have to understand why that data is important to the organization. Is it one of those KPIs that we talked about earlier? Is it something that I'm being held accountable for on my goals and objectives It's one of my own KPIs? Or is there some other reason that we've determined organizationally that this data is important? Again, data volume, just having a lot of data is not a sign that it's important. We have to assign importance to it based on what we use to drive accountability and performance within our organization. So make sure that that data is defined. What makes it important? That's the data that you want to see. Multiple presentation methods, as we've seen on the dashboarded samples that we've seen so far, they can satisfy a broad audience. So let's look at that a little bit. Let's talk a little bit about some different ways that data can be presented to tell a story. Here we've got last 12 months of revenue, expense, and net income. I can look at this and not really having any context at all other than the graph that I see here can make some judgments and assumptions about the operating health of this company and how they're trending and how they're performing, and maybe some things that I need to drill into, or some things that I'm really happy about. This is a presentation method that gives life to data in several different formats. It provides the high-level data for some very key areas on the left side, but it also gives some very detailed information about those results on the right side. So that macro to micro piece that we talked about early on. And then finally, for those of us that happen to be in love with spreadsheets, we've got some collapsed financial data here in a table format that gives us at a high level some very key operating data about the company and allows us to see, without having to wade through all the detail that makes up the totals, how the company is performing from a total sales standpoint, clear down to net operating income. All right, I promised you that we would talk about how this can provide a competitive advantage for you. So I'm going to start with another quote. It's the last one I'll have in the presentation, I promise. Clients should be expected to pay a fair price for a business's services. They should not be expected to pay for its inefficiencies. Okay. We know that over the last 2 years or so, that we've been able to make up a lot of gains in terms of what we're charging our clients, to make up for something that as an industry we were not so good at prior to that, which is raising the prices for our clients based on what our increasing costs of production were. Okay. What I think is going to happen this year and into 2024 and maybe beyond is that talk of recession, increased interest rates from the Fed, put pressure on our clients in terms of the cost of money and what they're willing to pay. And so I think the nice increases we saw over the last couple of years are going to be much harder to come by as we move forward. Money costs a lot more. So that means that as owners and managers of our respective businesses, we have to find ways to get better internally and more efficient in the field to gain margin points so that what we can't charge the client for in increased costs of production for labor and material and fuel and everything else, we can at least make up some of that from an efficiency standpoint internally. So to do that, how do we do that? Well, number one, we have to know the critical numbers. We've talked about that a little bit today. You have to know the critical numbers within your business. What drives profitability within your business? And I would say that most green industry companies have a handful of critical numbers. Number one, what's your gross margin? What is left over after you've sold your product and you've produced it for the customer. Those gross margin dollars, that gross margin percentage, if you know what that is and you understand what that is at the company level and at each of your selling division levels, it becomes a very simple math problem to determine whether you are going to meet the goals that you've set forth for your company. Let me explain. If I know what my gross margin, produced gross margin is, and I know what my net income target is, if I add those two things together and subtract them from one, what's left over are my fixed and variable overheads that I have to cover. And if they, from a percentage standpoint, are higher than that number I just came up with, I either have to produce at a higher gross margin, I have to cut my fixed and indirect overheads, or I have to reduce my net income so that my total is still 100%. So if I know what those critical numbers are, I can much more easily determine where I need to produce my product at and where I need to make changes in my pricing to meet the goals. You need to dig into the data. When I see numbers at a high level that are changing, I need to be able to dig into the data using the financial model to get more information to figure out what changes are necessary. As an organization, I have to evaluate the things I'm really good at, evaluate my own strengths, and then I have to use those to inform me how to correct my weaknesses. Maybe it's a process issue. Maybe I've got really good processes, solid, they're consistently followed in one part of the organization, but maybe I'm not so good about that in another part of the organization, right? Correct that weakness, we'll pick up margin points. Maybe it's exiting an unprofitable sector of business. There are a number of things that could be the outcome of finding a weakness and solving it. But you can use your financial model at both a macro and micro level to do these tasks. And let me show you how. If I look at key data for August, I can see here that my maintenance division is running behind year to date where I was at the previous year. So I want to dig down into that a little bit. And I know that I can, in another part of the model, go to my maintenance division and I can see how I'm performing in that division for the year. And in this case, I've got 4 branches. Well, it's very quick for me to determine that branches 3 and 4 are lagging behind where they were at last year. And that is the cause for our reduction on the maintenance side. So this drives me to dig into the numbers a little deeper. Hey, how am I producing that work? Well, if I go down and I look at branch 4's production numbers by division for the year, I can see, thankfully, that they have reduced their production hours on the maintenance side by almost 19%. So this tells me maybe this was a planned reduction, right, in revenue for this branch, and that now maybe we're producing that revenue at a much more profitable rate because our maintenance hours have reduced far more than our reduction in sales. And I would go through this same exercise for branch 3 as well, and really for any other branch that I saw a problem with in any selling division. But this is just a quick example of how I can take that high-level data and drill right down into it to get some answers about how my company is performing. Now, the final thing I want to cover is key financial ratios. Okay, these should be included in your dashboard. They're looked at by bankers. They're looked at by management as a quick way to determine health. So quick ratio, your cash and your accounts receivable divided by your current liabilities. That's a key one. Your current ratio, this is often looked at by the bank and maybe in your debt covenants. Your debt to equity, right? How much are you relying on debt financing to run your business? Banks will also look at this when they're evaluating your worthiness for a loan. and your cash conversion cycle. How many working days, how much time are you having to finance out of with working capital to make up that gap between the length of time it takes you to get your AR receipts in and the time that it's taking you to pay your vendors. Financial ratios really can act like an early warning system. So having access to these ratios on a regular basis can do a number of things, right? They can tell you whether your cash is too low. They can tell you whether you've got too much debt. They can tell you whether your collections from your clients are too slow, or maybe you're paying your vendors too soon. That's a lot of data that if you were just to go into your accounting system and look, would take you a long time to take a look at it. But if you consolidate that data into these financial ratios and you put them on your financial dashboard, you've got access to that information instantaneously as those numbers are updated, and you never have to worry about whether or not you've got the full picture.
Going to just again open it up for questions. Just put your questions in the Q&A section.
Yeah, I know how this works, Robert. This was a financial presentation, and it's either lunch or right after lunch for the majority of our audience. So I'm sure that the carbo load hit, and I may not even have any people left on the call.
You do have people, maybe they're just asleep, but we are going to, obviously we're recording this call. We will send the recording out to the attendees, but still got a little bit of time if people want to jump in with their questions. So we'll give it a minute or two. Matt McNall out of Colorado, are these dashboards typically linked to various systems, or there's any manual updating aspect? Once this is built, how much time does it take to update on a regular basis? Good question, Matt.
Yeah, that is really good. So Matt, there are several different ways you could do this. This model takes data from the ERP system and from the accounting system that has to be loaded into the model on a regular basis to provide the updates. You could build this if you had some pretty good savvy tech folks. You could probably hook the Excel piece into the back end of your accounting system using an ODBC connector. But this particular model that I provide to my fractional CFO clients is one that does require updating. But I think the good news is that a lot of times clients will ask me how much time they have to invest in it. And the answer is you don't, right? You just have to give me access to your system so that I can drag the reports out of there that I need to do the updates. So the administrative time for your staff is zero in terms of keeping this updated and visible.
Well, thank you. Steve, Charlie out of Arizona is asking if you are available to build these dashboards with the data they currently have.
Yeah, Charlie, that's a great question. Could I build one? Absolutely. What I try and do is use this particular financial model for my clients and take the data that you have and then customize what we're seeing to your needs. If there are things that, a particular company might need that they don't see here, this is pretty flexible, but we would take your data, put it into this model, and then some version of this model would be the actual output.
Jesse is asking if these examples of dashboards are built in Excel or were they generated by a management software?
Yeah, this is built in Excel. There are a number of different cloud vendors that you could go to get some financial dashboards at maybe a higher level. Might not be this descriptive and might not provide this much data to drill into, but there are cloud companies available that can hook into your accounting or ERP systems and provide some dashboarding similar to this, yes.
Next question, Ashley is asking if the spreadsheet template will be shared. I think, yeah, we will not be sharing the template, but obviously you're welcome to talk to Steve and see how he can potentially help you.
Right.
Brett, nice thank you message from Brett. I'm glad you could join us, Brett. Hopefully it was good information for you. Jeff, here's a good question. What's the number one mistake or mistakes the owners make about financial planning or reading their financial data for their business, especially concerning cash flow? Great question.
I would have to say the number one issue is that there's a tendency to look at invoiced revenue and confuse that with your cash position. Okay, so you may be, as an owner, looking at your business and saying, hey, we invoiced out $100,000 last month. How can I be in a cash crunch? And the simple answer is that what you invoiced really doesn't have any bearing on what your current cash position is. Your cash position is determined by your terms with your clients and when you're going to receive those funds. So if you invoiced $100,000 this month and you've got clients on 30-day terms and you invoice at the end of the month, you're really on 60-day terms, right? Because you've funded all the expenses for that service that you provided for them 30 days before you invoiced them, and now you're giving them another 30 days to pay. So that $100,000 you invoiced this month, you're not going to see for 60 days. That means 60 days before you get that cash to come in to actually pay for the payroll you're paying your guys or any vendor expenses that you had for those clients for that time period. So that's the biggest mistake. Make sure that you understand how your cash is moving within the business separately from how you're invoicing. And if you need help with that, your financial folks can definitely talk with you about that. But that is probably the biggest and most deadly mistake you can make, because if you don't understand the difference between the two, you may find yourself in a situation where you don't have enough operating capital and credit to move through your highest demand periods or highest cost periods in terms of payroll and materials.
Thank you, Steve. I know a couple of people are beginning to jump off, but I just wanted to clarify, I did make a mistake about the next meeting date or the webinar date. It's actually April 13th, and it's around leadership development. We have Dave Anderson, who just joined our team. He just got off a stint with being the chair of EO, which is a 16,000 member organization, and multiple other board positions, worked with Patrick Lencioni. So he's going to be sharing his experience on that April 13th webinar. Moving on to Mark's question, how long does it take, or did it take you, Steve, to develop the dashboard?
Good question, Mark. This has really been a labor of love for me. I'm sort of sick in the head that way. And so this is probably the second or third iteration of the dashboard, and it's not done. I mean, I constantly work to upgrade the dashboard, to bring in new concepts, and to make it more user-friendly and easier to update. But this is easily the total sum of probably several hundred hours work conservatively.
Pam Hill is asking, how do people get in touch with you if they have further questions? I don't know if you want to share anything, Steve, and then I've got another question for Jeff after that.
All right. Yeah, let me, I will, once you ask Jeff's question, I'll put the contact information back up here on the screen.
Okay.
And,
So Jeff's question is, as a business owner, what's the best data points you would recommend to branch managers looking at each month?
That's a great question. I think from a branch manager perspective, if you're holding that individual accountable for key items like gross margin production and sales, then I think those are probably the two key pieces, right? You want to make sure that they are on track in terms of meeting their budgeted sales. You want to make sure that they are producing it efficiently within their organizations in the field. So I think those are the two most critical numbers: gross margin and sales. If that's how you are organized. There are obviously a number of other measures that we could probably look at, but those would be the top two in my mind.
Cool. Thank you, Steve. I think that is all the questions. So not Tom. Tom recently, Tom's from Boulder, Colorado. Welcome, Tom. We just recently implemented Aspire, but have not begun leveraging Aspire dashboard functionality. How does your dashboard differ from what can be done in Aspire? That's a great question, especially since we have two key people that came here from are on the call from Aspire.
Yeah, that's a great question, Tom. So I think the short answer is that there are a number of things that you can do in Aspire with dashboards. But remember that Aspire only contains sales and cost of goods sold information. So all of the visibility that you get to information in Aspire and that you can put on your dashboard is limited to the upper half of the income statement. So you can drive sales down to gross margin. But it's not easy to see readily some of the data relationships that we saw in the dashboard. So this dashboard really combines the data elements from the ERP system and marries them together so that we get a full picture of how things are occurring versus just pieces of the picture. But I would say this: Aspire is the place that you want to keep most of the data, and you want to set up good dashboards there for your operating folks, right? For your branch managers, your production managers, because all of the key things that you hold them accountable for on a daily basis can definitely be gotten from Aspire and given visibility in terms of either a dashboard dial or a KPI on their home dashboard in Aspire to drive that accountability and visibility.
Cool. Steve, I think that is everybody's questions. Nice job for handling those. There is Steve's information on the screen. We've obviously got his email, phone number. I know Steve is always welcoming answering people's questions, so he would appreciate or help people answering or questioning him. So I think that is all for today. I'm going to thank you all for joining us, being part of the conversation. Just again, keep this momentum going. Please follow us on social media channels, subscribe to our newsletter, our YouTube channel. A lot of you have seen the Commercial Landscaper podcast. We're doing weekly interviews. We have over 5,000 listeners, and hopefully we'll see you all on April 13th, 1 p.m. Eastern for leadership development presentation. So thank you everybody for joining today.
Thank you very much.